It's Quant Trade Edge, and today I was going to look at some swings on the NASDAQ. The NASDAQ gapped down quite a bit. This is a 10-minute chart. If we go to, say, a 5-minute chart, we came down, and then if you start looking at the swings, you'll notice something odd. We've got 1, 2, 3. Let's see if this is. Nope, that's higher. That's lower. This is just an odd number of swings to have in a move up, and that could just be a sign that you're in too low of a time frame. So noticing this, it would have been helpful to switch to a 10-minute time frame, and then take these swings out of here. There's far less swings the higher the time frame you go, because typically what could be a one-legged move in a higher time frame is a two-legged move in a lower time frame or more, and that's what ended up happening today. So if you found the 10-minute time frame, the NASDAQ was actually pretty clean today. And I actually was stuck looking at the 5 for a while, and then my partner Alex pointed out that 10 was where it was at today. But here you could see a very clean ABC up, and then a very clean ABC down, and then that afternoon rally was a very clean ABC up. So, literally here, once you saw this ABC up complete, this was a shorting bar, and going all the way down to here was probably about 3R, maybe 3, a little bit over 3. But also keep in mind that as you go make this new low, as you come up, this is going to give you a second leg down, so you can add on the break of this bar here and then trail your stop above these bars, because you know that if one of these gets taken out, then your 2 waves is complete. So that's just a way to add a little bit of extra juice to the original trade. And then over here, when 2 waves are complete, this is your risk bar. And this risk bar would have gotten more than 4 times your risk. This high to low was about 23 points. So 46, 92 points, call it 100 points above 756 was 856. Yeah, we got to 856 about here. Okay, on this bar. So a little bit over 4R there, but again, using the same little trick that we just mentioned right there. When this bar came in, this could have also been a place to add, and you would have gotten 2R on your add into there. And technically, this is still moving. The market's closed, and it's probably advisable to get out. But in theory, this could continue higher. We just don't know what the overnight volatility will bring. So that's why it's best to go ahead and exit those positions. A couple of leading stocks on the NASDAQ. If you remember, AMD had this monstrous rally yesterday. And if you bring it down to a 30-minute, throw in the 20-period moving average, you'll see that yesterday you had this pullback and you had this rally back. And then today we gapped up, and I'm sorry, it would have been a gap down, but we did test above that little area and had this correction down. And that's kind of an A, B, C. There's your 2-legged move. And that 2-legged move led to this rally here, which is still, in theory, continuing. And here for me, this bar was a little bit too big for my liking, because I like to look at it as my expectation of an ABC is to get to around the 1.272 fib extension. So using this bar here, maybe that's 2R. This is high to low is 243, 480. On top of that would be it's less than 2R. 2R would be 161.60 roughly here. So that's why that was not as exciting for me. But just like we mentioned in the other video where you can, follow the swings, this bar all of a sudden was interesting to me because the risk was only $1.10, call it. So 440 on top of this bar gets you to that level right there would be 4R. So, this level here is about 3.5R. And that's a reasonable return on risk. So again, this isn't just a blind, take the ABC down because you don't, you want to assess how much risk you're taking and what you expect your profit to be. And of course, this is AMD. It could be up 20 bucks tomorrow, and that would have been way more return on risk, but you got to have some sort of standard way to measure it. And for me, on an ABC, the 1.272 is my conservative expectation of where it should go. A lot of times you go to the 1.618, a lot of times you go further, but I want to make sure that the risk bar is sized for my conservative expectation. And I'll just put one more up here. Microsoft. Microsoft recently broke out of this pennant type pattern that was going on here. It's gone up 1, 2, 3, 4 days. This is the first day of pullback. It's a pretty clean pullback on a 60-minute chart. So, here you've got that A, B, and then the opening bar was your C down. And similarly, I didn't like the idea of taking this bar because, again, my expectation is the 1.272, and that would only be about 2R. I waited for this little pullback here, and this bar was only $1.46. So call it $1.50, $6 higher. You're talking about $3.94. So ahead of that, $3.94.50. So about here. You would have 4R on this risk bar. And that's a little more to my liking in terms of risk reward, and that's a very achievable level, given that I expect the 1.272 retracement or extension level. So anyway, these are the type of market structure that we try to read and provide guidance on in our Discord. And I'm really amazed that people are really coming along in the Discord and pointing out a lot of things that we miss as well, because there's just so many markets, so many time frames to look at. And when you spot the one that's working, like NASDAQ today was doing on the 10-minute, that just made it so clean, it becomes a lot easier to find those spots. So anyway, ask questions. We're happy to answer those, and we'll see you tomorrow.